Okay, so this mastermind question, we tackled the rate versus value options. We know that it's very difficult to compete on rate, and sometimes we lose on rate. So the alternative is to compete in value. And to add value to a client, there is 5 ways that we identify at the mastermind. One is service, the other one is options, third one is strategy, fourth one is knowledge, fifth one is relationships, and sixth one, or last one, is to act not as a mortgage broker, but as a mortgage planner. So let me give you examples on each of these categories. Service. How do you beat a lender on service? Number one, answering the phone right away, responding texts right away, and responding to off hours, because we know banks sometimes cannot do that or not willing to do that. So that's how you compete on service. On options, for example, Kyle has a beautiful budget that he reviews with clients, and a lot of brokers in Canada are doing that. If you want a copy of that budget, if you contact us, we'll be able to provide you a copy of it. But in any case, when you provide options to a client, it's a very difficult proposition for a client going directly to a bank, because they know that the bank will not offer them options. Okay. Number 3, strategy. Glenn discussed the option of providing a term that they coin as rate insurance. What that rate insurance means: for all your clients that are on a variable rate, reviewing those variable rates on a regular basis, let's say bi-weekly or monthly, and then providing your clients with opportunities to fix or to reduce that variable rate at a lower rate is something that a broker can very easily do, and banks usually don't do that service. So that's another way to provide value. Number 5, knowledge. Shannon had a great feedback on how she's been able to win a lot of files competing with other banks on rate by providing real value with product knowledge. What does it mean? For example, she was explaining how TD Bank, with a variable rate mortgage, you can fix the term into 3, 4, or 5 years one day after you set up the variable. For example, and other banks will only do that on a 5-year fixed term. So by providing those deep knowledge and of products, you will be able to compete on value versus price. Another very important one, relationships. If you're able to connect with your clients at an emotional level. I've actually lost files because I start a pre-approval, and somehow that client goes to another broker, not even another bank, another broker. And let's say that other broker makes a deeper connection with the client. For example, I don't golf, but that broker does golf, and the client golfs as well. So I start talking about golfing and everything around golfing. That relationship that they're able to build, and that bond, will steer the application their way and not my way. But you can use that if you learn how to do this the right way. You can use that to your benefit. And the last one that is the particular one that I love the most, and that is acting as a mortgage planner versus a mortgage broker. And I'll give you a specific example where I was able to win on rate versus just by adding value. And that was when a client came to me already approved by a major bank, and with a very low rate. When I looked at the rate, not even me buying down that rate, I was able to compete with that lender. And the client just said, Camilo, I just came to here because you were highly recommended, and basically I need you the lowest rate and see if you can beat this rate that the bank gave me. So I knew I couldn't, and I took the call. I took the time to understand the client's financial situation, and in a nutshell, his main drive was to buy this property, but he wanted to buy a second property as fast as he could, because he wanted to increase his real estate portfolio. And I asked him, based on his own research, when he would be able to buy that second property. And he goes, in 5 years, according to his savings habits and whatever and what have you. And what I did was I run a scenario where I show him how he could purchase another property using a readvanceable mortgage in 2 years versus 5 years. And then he was shocked that I was able to show him that, and he wanted to cancel his other approval right away, which I said no, until we were able to get my approval in place at his satisfaction, which he liked. And at the end of the day, I ended up showing him, and he ended up buying 2 years later a second property, and I did that financing as well. But when I was dealing with that first mortgage, I told him that there was positives and negatives. The positive is that he could buy a property in 2 years versus waiting 5 years. The negative is that the rate that I was going to give him was going to be possibly 10 or 20 bips higher than what he got already. And that would mean that he would have to pay, let's say, 50 or 60 bucks per month more, which he answered to me, I do not care about 50 bucks a month. After he was telling me that he wanted the lowest rate, because his real need was to buy another property, and any appreciation in two properties in one particular year could offset any savings on $50 a month. So he even told me that to me. And we proceed. He was super happy. And up to the last day of funding, the other lender was telling them to tell them the rate that the broker gave them so they could match and beat them. And at that time, it was almost over for the other person. You can imagine a lot of solutions like this, like I just showed you, when you understand deeply what is the real need of a person. It may not have other than purchasing a home, but sometimes you'll be surprised how many needs people have that if you go deep, you can uncover and get solutions like this and add real value. Hopefully this helps. So the 5 ways are service, options, strategy, knowledge, product knowledge, relationships, and acting as a mortgage planner. I hope this helps. All the best.